Okay, good morning, everyone. Welcome to this latest from Quantum's Building Financial Fortitude series. My name is James Ashton. I'm a financial journalist and author. I'll be your chair for this morning's very timely discussion. Financial Fortitude from Quantum is aimed at advisors and businesses alike. And as the pandemic rumbles on, the idea of life returning to normal seems a bit like a mirage in the desert. Now we have vaccine nationalism to challenge us. This Financial Fortitude programme has much more to come. There are articles, videos and events to provide practical insight, how to tackle what's going on in the economy right now and taking people from crisis planning to looking at longer term strategy. Now, evidence of crisis and the need for a plan is nowhere more obvious than on the high street, where even this week Debenhams and many of the Arcadia brands are preparing to disappear from shop fronts in favour of ASOS or Boohoo's internet fascia. I'm sure that many people on this call will have noted the ONS figures from last year that include a 25% drop in clothing sales, but a 46% increase in online spending. Are there more high street closures and consolidations to come? Undoubtedly. This is the first of two events from Quantuma on the subject of retail. In April, we'll be back with a conversation on the reinvention and alternate use of the high street. Today, let's assess Christmas trading and the immediate aftermath. Please do send in your questions as we go. I've already got plenty, and I'll get through as many as I can before we finish at 10:30 this morning. I should introduce the panel who are going to be answering those questions. First of all, we have James Pow. He's chairman of celebrity jeweller Theo Fennell. He's also chairman of the Hurling and Polo fashion label. If you delve into his CV, he's been CEO of Cruise, Aquascutum, Hackett, and if you go back a little further, he's also been involved in John Smedley and Pringle. Basically, if you've worn it, there's a good chance that he sold it at some stage. James is also a senior retail advisor to Quantuma. Alongside James, Kirsty McGregor has spent almost 7 years at Drapers, which is the leading authority on fashion retail, as you know, and in the last 18 months, she's been editor at drapersonline.com is the website. If you haven't subscribed, and you probably should. Steve Sidkin is chair of fashion law group at the business law firm Fox Williams LLP. And finally, we have Simon Bonney. He's a managing director at Quantuma. Simon is a licensed insolvency practitioner in the restructuring team. Let me turn to James first of all. James, just thoughts on Christmas trading and where we are now. Is this the worst you've seen it?
I have to say that it is the worst that I've seen. It has been probably the worst in the last 25 years, with something just short of 180,000 jobs during the period. The golden quarter, as it's called, lost retailers, circa 6.7 billion of sales, and as you touched upon earlier, online sales were up 55%. So it's really a tale of two different parts of the sector now, which are becoming completely divergent. And if you look at the stalwarts of the businesses that we knew, M&S and Burberry were between 3.6 and 4% down in the weeks up to Christmas, whereas Boohoo were 40% up, and Next were 38% up, but against a loss in retail sales in the stores of 43%. So it is a really big change. And I think, unfortunately, we're going to be seeing a lot more in this year as we head towards the end of March.
And there is that tale of two sides of the industry, James. I suppose there's the ones with a really good digital presence and the ones that have really clung on to the high street. I suppose also, given the names that you've mentioned there, there's the big versus small issue as well. I mean, someone like Simon Wolfson at Next and at M&S, I mean, they have the wherewithal and the range and the resource to reinvent themselves. I suppose the retailers who are really feeling the squeeze are going to be those mid-sized brands, the smaller brands who haven't really got the resource.
That's absolutely correct. And as we know, the difference that's happened with Debenhams and the Arcadia group today is going to continue that change in the landscape of retail going forward. And a lot of these middle retailers in the townships in the northeast, Mansfield and places like that, will see these anchor tenants disappearing from large centres, which in itself will cause further harm for the more rural retailers operating independently.
Kirsty, let me come to you. Do you have it? You know, you're very, very close to this on a daily basis. I mean, do you have a sense of timeline for recovery and all of these shops that are not open at the moment? Are they stocked up? Are the staff poised? Are they ready to go, or has the industry been much more laid to waste than that?
Yeah, I mean, it's likely to be several months before non-essential retailers are allowed to reopen. It's obviously changing on a daily basis, and we seem to have new headlines every day about the latest with the vaccines. But if you look at that kind of timeline that the government is now working to, we're not going to have an update until later in February, and they're now working towards the 8th of March for schools to reopen. Following the first lockdown last year, the shops reopened a few weeks after the schools, but we are now seeing worse rates of infection, so it is likely to be slower this time. I've seen reports that the government officials are kind of working on plans under which shops will reopen in April and hospitality will follow in May. And some retailers have already said they're working to that date. So I think JD Sports in their trading update recently said that they don't expect to reopen their UK stores before Easter. So if that's the case, we have a good few months to go still. And so that's why we need urgent clarity on some of the issues around things like the business rates holiday, because, you know, there's just for some of these stores, there is no revenue coming in, and they are really going to struggle with cash flow in the next few weeks and months.
And what does it mean? We are seeing, we're seeing closures. We're seeing a lot of, we're obviously following closely the Arcadia news and the Debenhams news. It seems like it's the administrations that are driving the reshaping of portfolios and closures at the moment. Do you think because so much else is in suspended animation, we aren't really seeing the sharp reductions in footprint until we've got more clarity on how these retailers climb out of COVID?
I think with those particular examples with Debenhams and Arcadia, they had so many underlying issues. It was a bit of an inevitability, really, that something like this was going to hit them the hardest. There's been a lot of talk of how COVID has accelerated the digital transformation on the high street. There's still very much a balance to be had between digital and the bricks and mortar, but for those companies like Arcadia that haven't invested enough in their digital proposition, there was that inevitability, really, wasn't there? So it was no particular surprise that those were the first to go. For the rest, I think it's going to be a case of, how quickly can they turn things around in terms of their digital propositions? Can they react quickly enough to the changes in consumer behavior in terms of the product that they're supplying people with? And that's the difficult thing for the likes of M&S. Yes, they're big and they have, they have a certain kind of weight behind them. That also does mean that it is difficult to turn things around quickly. And at the moment, the people we're seeing do well are very reactive to those changes in the market.
James, I was reminded the other day. It's a year ago this week. I interviewed Chris Grigg at British Land, and one of the big landlords, and he talked about perhaps a 20% reduction in retail space, in high street space in the UK. Do you think he was being a little bit conservative? I mean, this was pre-crisis, obviously. Do you think where we are now, James, that means he was a little bit conservative, and probably an ideal time for him to retire, by the way?
Yes, I think he was being conservative. I think it's going to be far more serious than that. And I think the government is holding back as long as it can before coming to decisions on the rate situation. But I think they are staring at some rather big numbers in terms of the cost that this will bring to the economy in general.
Simon, let me come to you. We touched on this already. We don't, if nothing changes, there is a cliff edge at the end of March when once again winding up orders can be pursued and rates relief drops off and so on. What is the thought process at the moment, you think? What's the conversation like between landlords and retailers?
I think it's a very challenging one, and it's a very challenging one for a couple of reasons. The first is that there's still a great deal of uncertainty as to when this ends and how it ends. As Kirsty said, we've had this kind of skeleton of a timetable of potential reopenings, but the one thing we've learned in the last year is we can't rely on anything. And so for businesses trying to have conversations with landlords, and for landlords trying to figure out what they're doing, they're still doing it relatively blind in the sense of renegotiations, because they don't know whether they will be open in 3 months. I think the second point is that to have a negotiation about a small amount of money for a shorter period is a much easier conversation to have The problem we have, and the problem which continues, is for those businesses that have taken government support and used that just to keep afloat without being able to pay their rents, they're now in a position where they are potentially owing too much, and landlords just don't have the latitude to be able to give them the discounts that they may need in order to survive. So it's still a very challenging piece. There are still some very aggressive landlord positions. There are a number of landlords who've been much more amenable to conversations, but we're still in a negotiation where there's no certainty as to what the future looks like.
So where are debt levels? I mean, just silly numbers?
Yeah, silly numbers, and getting higher, James. You know, that's the big issue. The government support, whilst it's been very helpful in terms of furlough and the business rates, something like the moratorium on landlords, I think with hindsight probably was a very interesting, is a diplomatic word, but it was a very interesting statutory instrument to bring in, because what it's created a real problem. It's created a big bubble which the government has no control over unless it continues to legislate. And for those landlords who want their money back, they're entitled to it under contract. And so the debt levels are at very high numbers and continuing with not an end in sight.
It seems like a good time to reach for your lawyer, Steve. I'm curious about, I mean, Simon's given a great overview, and we've seen some of these tensions already spill out into the public. I'm interested in where you see the legal conflict.
You're frozen, James. Sorry, the legal conflict. James, you're frozen.
In the meantime, could I possibly go back to you, Simon, and ask a cheeky question? Sorry, this is what happens when you invite another journalist onto the panel. I know some property bodies jointly lobbied the government last April to intervene on the rent issue, and they suggested a grant scheme, didn't they, where retailers and landlords and the government would share the fixed property costs on a sliding scale, which sounded kind of, very sensible to me, certainly, but the government showed no appetite for that solution. Have you got any sense that the government does have any intention of kind of helping retailers and landlords come to the table, sort out some of these outstanding issues with the massive rent debt crisis that we're facing?
The answer is no, Kirsty. I don't have any sense that they are. I mean, I have debated before whether there is potentially discussion about legislation to try and put in a longer term solution to this, because landlords for me are they're the large debt that the government can't control at the moment. They can stop HMRC pursuing money. They can find they've already with the C bills and B bills enabled the banks to be able to put out money where the government essentially is backing it anyway. So the government will be in control of the debt ultimately. But with landlords at the moment, they don't have that same ability. I do suspect that they will have to, or if they're not already, they will have to think about the way in which to try and legislate for some form of agreement with landlords and tenants and grants. But having said that, it's a very uncomfortable situation because it is the government getting involved in private commercial business. Yeah. And that is a very dangerous place to be.
Sorry, I got distracted there. I thought Steve was taking an incredibly long time to consider his answer. You might well have covered this point, but I'm curious with Steve. So there's the general stuff, and of course there's the landlord negotiation. I know some of your special area, Steve, is around suppliers, and I'm curious about this remaking of retail with the internet brands stepping in and so on. I mean, we might not want to talk specifics, but if you are say a beauty brand who was previously displayed lovingly in the beauty halls of Debenhams and others, and now suddenly your key route to market is through one of the online brands. I mean, what do you do? Do you rethink how you supply the market? Do you look to be direct to consumer? How do you tackle that?
you've got no choice but to try and rethink very quickly indeed. Switching, if I may, James, from beauty to footwear. I know that a number of footwear brands who were offering their products through the major retailers, Debenhams being a case in point, they are now struggling to find a way of getting product to consumers. It doesn't have with something such as footwear, with something such as beauty products, it doesn't have quite the same feel about it when you get the doorbell ringing and someone's dropped a cardboard box on your doormat and you pick it up, you go in and you try on the shoes in your living room, in your bedroom. You try on the beauty products or apply the beauty products in the bathroom. It's not quite the same of going into a store, having the product brought to you, trying it on, sitting in the chair in front of the mirror and having someone apply the beauty products to you and talk you through what beauty products will do apparently to you. It's not the same. I think what we're likely to see, if I may go on, James, are you okay?
Please do. Yeah, no, it's interesting. I was going to ask you if the same applies to Doc Martens, but I'll come on to that in a minute.
Okay. I think what we will see is a combination. I think we will see greater use being made of the online channel in terms of demonstrating to people what they're seeking to achieve in the context of beauty products. I think we will possibly, when restrictions ease, and it is to my mind a when, not if, when restrictions ease, I would not be surprised to see the reinvention of something that has been in terminal decline for many decades, namely party plans, where individuals are encouraged to have friends, neighbours round in order to talk them through the particular products. I would not be surprised about that at all. And I think also what we will see is an increasing rise of the indies. I'm very confident about that. Why? Well, a few weeks ago, it was reported in the news media that the likes of Curry PC World, Halfords, Matalan, Game, they do not have a telephone number by which consumers can contact the business in order to make inquiries. Everything is done online. Now you may say, well, that's how it should be. It's very efficient. I could name a number of businesses, consumer-facing businesses, where to navigate their website and to get help is absolutely appalling. Indeed, there is the perfume shop, which doesn't have a phone number where consumers can contact, doesn't have an email address. It's arguable that these consumer-facing businesses, these major retailers, actually don't want consumers to contact them. And yet, I do know that in a particular part of southwest London, where there have been invariably over the course of many years now, 10 units out of say 100 units, so 10% of the retail stock, empty or to let. Over the last 4 months, half of that stock, unlet stock, has been cut. Indies are going in. And I think they're going in to provide a service which is not being provided by the major retailers.
Interesting. Yeah, so bring back party plans, we'll all be drinking baby sham and eating Black Forest Gatto or something. James, I mean, I think this is very interesting from Steve, but I suppose the broader point is the retailers who will do well, they probably do still need shops. They probably need fewer of them, and they need to be able to continue with that emotional connection and that good customer service.
Yes, I think that's absolutely correct. And I think while the dynamics in the business model may have been in previous years something towards 80 to 90% of physical store premise and 10 to 15% of online if you were doing well, I think that shift is now probably in a good model 70 to 75% online target and 25% footprint on physical retail stores. And whilst I acknowledge Steve's point I think one of the biggest points to be made are when you look at brands like Apple in particular and Disney, who provide and nurture the consumer experience through phenomenal consumer satisfaction in store, great training in store, great salespeople in store, retention of data in store. You're bought into the whole cycle of the product, and you can resell your old product through the same system. So I think you're going to see more emergent businesses showing the Apple profile. And yes, you will have the bigger marketplaces, which Boohoo and ASOS are trying to walk into. And I think you're going to see more of that divergence. There will be independence on the high street, but why I'd also say to Steve, because they will be doing something quite different to the previous lookalikes and U2s that we've now seen in the past 20 years come and go. And when we're looking at predictions saying that we could see another 19,000 stores disappear this year, that's 20% on last year. That's a huge, huge sea change.
It is huge, but it seems like what you and Steve are saying is that there is something of a shakeout going on. And actually, if you are good at retail, you can thrive regardless of Amazon, regardless of the others. And a lot of those Me Too's, whether they are the multiple stores or independents, they will go and you know, they needed to be better.
That's very true. On the Apple platform, many retailers are pursuing the Apple lookalike, and Canada Goose, Loro Piana, they're actually going out to own the lifestyle of the target consumer, and they're initiating intelligently into that space to keep that consumer and grow with the consumer throughout the journey of the product.
And it's interesting because I think, as one person has put on the chat, an anonymous attendee has said that the stats suggest we have more shops now than we had 10 years ago. So to some degree, we're unpicking that excess expansion.
But James, I think it's the case that for a few decades now, we have been over-retailed, so particularly so far as brick and mortar is concerned. Brick and mortar developments have gone on up and down the country for a number of decades, and the growth in the market has not kept pace. So essentially what you have is cannibalism.
Kirsty, we should come on to business rates. I think there's been an accepted wisdom that business rates are not fit for purpose for many, many years. And as questioners one question that came in advance of this session, as a result of the ongoing unfair competition from the likes of Amazon, when will the government change the rating system? This seems to be the big question. Do you think it'll come up in the budget?
Yeah, well, I think it needs to, and they've certainly made promises. I mean, really, they need to make a statement on it sooner. I would say we had an announcement yesterday about Scotland's business rate holiday being extended for a further 3 months. So that's the holiday extension, at least sorted for them for a few months, but we haven't even had that yet in England. And to the points that were just being made about, you know, the power of good retailers and independence on the high, you know, still having space on the high street. I think the problem has been we've seen actually some really good retailers having to reassess the viability of their bricks and mortar stores because the costs of running them has been so high. So yes, in the short term, business rates holiday extended because we can't see a cliff edge in April when shops are about to reopen. But longer term, the entire system does really need to be looked at urgently. We did a big survey of our readers last year, and I think 90+% agreed that it's just not fit for purpose at all. And you know, it wasn't fit for purpose pre-pandemic. Now that a much larger proportion of sales are online, it's even more out of step. So yes, there's an unfair advantage for the online pure plays, but it's just the whole way it's structured really means that a lot of people are paying quite unfair rates based on the actual value of the properties against which they're raised. So the multiplier is too high. It needs to better reflect the rental value of properties. We need more frequent revaluations. None of this is new. You know, Lord Wolfson, next CEO, has been talking about this for many years. There have been several reviews of the system already. I think the problem we've had in the past was the 2015 review. They were insistent it had to be fiscally neutral, which is another way of saying that it needed to continue to make the same amount of money for the Treasury, which naturally limits your options in terms of making.
Because what does it bring in? I mean, it's the best
change.
part of 30 billion, isn't it? I mean, but you know, but if you include offices, I think, I mean, it's a pretty big chunk.
It's a lot, and yeah, so it's not like you can just scrap it and, you know, local authorities will just make that money up somewhere else. So I do appreciate that, but I think it just needs to be updated. You know, the way that we retail now is very, very different, and you cannot assess rates based on property values from 3, 4, 5 years ago, when things are changing so quickly. And the pandemic has just put that all into sharp relief. It's not necessarily changed it, it's just made it much, much more urgent.
Yeah, good question from Debbie Harvey, who's tuned in, if that's what you do with webinars. Steve, I'll ask this to you. The panel opinion of clothing stores moving towards carrying small stocks, operating like the Argos style stocking system to take and deliver goods, moving towards an experience rather than a stack it high philosophy. I suppose this is pretty similar to what, you know, we've talked about M&S and others moving towards this family of brands model. What do you make of that?
I'm not so sure, James, it's moving to the family of brands, although I'll come back to that in a moment, if I may. But I think this does have implications for the supply chain. Essentially, if the stores are going to hold a small amount of stock and then be able to supply it, absolutely fine in terms of providing the experience to the consumer, which James has touched on and Kirsty's also mentioned. Absolutely fine. But the stock has to be held somewhere in the supply chain, which means that there are implications for cost, who bears the cost of holding that stock, the implications for risk. It goes all the way, it backs up the supply chain, passes it down. Absolutely fine if your suppliers will go along with that, if your warehouse logistics providers will go along with that. And also if you're able to make sure that having had the consumer come in and they say, yes, I'd like to buy that, that you can then deliver within a short space of time, whatever that is, to that particular consumer. Because if you can't, then you're not engaging with the consumer, you're not providing the experience that the consumer wants, and the consumer will go elsewhere.
Yeah. And how do you structure that then? Do you still need some? Because it's interesting, of course, there are no Argoses anymore, or there won't be on the high street. They're all popped into a Sainsbury's, and they're trying to build up the brand, you know, sponsoring Coronation Street at the moment. Do you still need? Would you still need a few shops there and then a whacking great warehouse behind them, or is the whole thing digital?
You will still. Depending upon the product, I can see that you have the units, you have the people going in. They will be given the opportunity to feel, to touch, to try the particular item in question. When it comes to fashion, if it doesn't fit them because they are size 12, but the sample will not, that they have in store will not be a size 12, then either there will be the experience, because AI will have developed to such an extent that people can appear as if they are wearing the particular item, or they will be given the opportunity to have the item delivered. And if it doesn't work for them when they're in front of a mirror, then back it goes to store. But then you need the logistics to be able to provide that.
I think that's a key point about the product difference. Sorry to jump in if I may, but you know, if we're looking at the way that you shop for different categories, it is very different. And for fashion, I mean, during the pandemic, it's become a lot more functional. You're going to try and avoid any unnecessary trips to the shop. So we've seen lower footfall, but when the stores are open, the conversion rates tend to be much higher because people are going in because they know exactly what they want to buy. That's not usually really the case for fashion in particular. You know, it's an experiential, kind of more of an emotional purchase perhaps, where you might go in not necessarily wanting or needing to buy anything specifically, but you want to just have a browse around, you want to touch and feel the product. It might be a social trip out before you have some lunch at the weekend. And so that's where I think the roles of stores they're not all going to become these kind of, you know, boxes where you can go in and you just order things, and there's a warehouse behind the scenes like an Argos, and then it's brought out to you. So I think there will have to be a mix, but obviously the Argos format, that the convenience of that does work, and perhaps some fashion retailers will look at having more in terms of their click and collect and those sorts of offers, and having more in the warehouse as well, so that they can kind of meet both of those sides of the shopper behavior.
Kirsty, I suppose the vast majority of retailers and so many other industries, and hope that we will go back to normal, that we will actually, that the consumer will need just to be, they'll need to just go. And you're right, everything's so transactional, and it's glorious when you get a high conversion rate, but people just like to wander, browse.
Yeah, at the moment the enjoyment side of things has been completely, it's just disappeared. But the hope is that obviously, I don't think we're talking in a matter of weeks or months, but in a few years, a couple of years time, maybe there will be back to a place where people feel confident going back into stores on that kind of browsing basis. In which case they're going to want that experience. And again, it goes back to that what we were talking about that indies do so well, where you're greeted by name, even if you're going to your local independent, but certainly you're greeted as you come in. They come and help you. It's all of that is what makes shopping in stores so much nicer at times than just buying a transaction online.
James, with all this uncertainty about retail and brands and so on, why are investors getting so excited about something like Doc Martens? That was a question we had from a listener. I mean, are Permira just wonderful salespeople?
Permira have done an excellent job with Doc Martens, but then again, Doc Martens and the management team have done an excellent job with the product, and they've actually targeted several different realms of consumer within the target audience, and they've delivered appropriately, magnificently on time. And referring back to the conversation you had with Steve and Kirsty, in the 80s, there was a business called CBS Family Club Sony in Japan, who did exactly what Apple have done today. They had satellites in inner cities showing the products, phenomenal customer service, and they then morphed that into what was the old GOS mail order catalog before the internet was there, and they had fantastic success. So I come back to the Apple model, and I would also say that I think the disruptor brands that you'll see coming to the high street, the new upstarts, they won't be taking the same leaf out of fashion businesses that have been there before, because I think when we're seeing such decay on the high street, it doesn't mean that the fashion business is ideally correct for the high street anymore. So much more is going to be online, and the tactile assessment with everything that progresses with the internet will change. And so fragrance and other products at some point will be able to be adopted through sending these through the post to allow the consumer to test before even buying the fragrance.
Simon, a good question from David Grant, who's on the call. Do we see more private equity and investment firms forming SPVs to acquire brands and digitize them, like TM Lewin and Talk Brands? And I think that's Alan Leighton with his new line of natty shirts.
Yes, I mean, a lot of what's been said recently, I think, for me, I suppose I come at this very much of businesses that have an infrastructure and don't have the capex to change versus businesses that are able to either start and be what they need to be, or have the ability to maneuver. And with the likes of the brands that have been bought out of Arcadia, what you're seeing to an extent is businesses which no one has an appetite to put the money into restructure in a solvent process, in an equity way. And I fully expect that you will see more private equity money coming in, taking brands. I also fully expect you will see much more insolvency, much more failure in the retail sector, but not necessarily the failure of the brands, the failure of the corporate structures behind them, and the regeneration of the brands that may come out. Because fundamentally, what we'll see is the combination of the retail side of this, but also the business side behind it. shareholders who want to own the whole of a business and don't want to own part of it and are the only party that are able to put in the money. Private equity who want to come in and take on a business but not have to pay the debts that it has now. So I think there is a lot of change to come still in the retail sector, and and a lot of people on the sidelines who are there with a substantial amount of money behind them to be able to take a brand forwards a new way.
And that's interesting. I mean, one of the questions sent in before, what are your views on the treatment of landlords? That's quite a loaded question, Simon. But if you're, I don't think the for example, TM Lewin is troubling too many landlords. We saw the pictures. They cleared out the stock, and it's all in a warehouse somewhere now.
Yeah, it is an interesting one. I do have a degree of sympathy for landlords. Going back to what I said before, they are a private supplier to companies, and they have been interfered with by legislation in a way that other suppliers haven't. A lot of people would say landlords have had it too good for a long time, and leases have always been onerous for tenants, and there needs to be a change. And COVID-19 may drive that with the likes of turnover rents, which we're already seeing a lot more of. But I think ultimately, do I feel sorry for anybody that loses money in an insolvency? Yes, absolutely. But at the same time, no one goes into business with their eyes closed. You are taking a risk when you enter into a contract in a business capacity. And so, at the moment, the consequences are likely to be more severe than they have been, just because of the circumstances. Probably the one thing I'd say, James, in relation specifically to more my sector and the restructuring side, is landlords in the context of CVAs, and some landlords who are clearly very aggrieved by CVAs. The one thing I would say on that is that I do have a degree of sympathy to the extent that CVAs only restructure a business by reducing rents. I think unless there is a change in the way a business runs in order to make it viable, I think it's difficult for landlords to accept that they're just paying for a business to be able to keep going.
Kirsty, do you sympathise with landlords? Is there a dose of realism in the landlord community at the moment? And I'm wondering, following on from that, does it have to be turnover-based rents? Is that the only sensible way forward?
We hosted a property roundtable last year, and we brought together retailers and landlords, because I guess our view was, yes, a degree of sympathy on both sides. Neither side could have envisaged the pandemic, and it's not either side's fault. And I think, reflecting what has already been said, there was definitely an appetite to work collaboratively to find solutions, but it's not happening across the board. And I think that's where we're struggling at the moment. It's just that some people are really digging their heels in. Upwards only rent structures needed to change for quite a while. This has forced that change. The moratorium has given kind of retailers a stay of execution, but it's taken away landlords' key leverage to enforce rent collections, and protect their own revenues. So where do you come down on this in terms of, it's difficult to sort of take sides. But I think, now with revenues largely stalled again, the question remains how we're going to deal with this rent debt. And the move to turnover rents has been, it's not a new idea. Again, there's been this disconnect between what's historically been paid in rents and what's now affordable. So yes, that is where the market is moving, and we're seeing a lot of that forced through via these CVAs, which has I think heightened the tensions. But the thing with the turnover rent model is it really does need to be based on trust and collaboration. We do need those different parties to come to the table and really talk openly and be willing to share data. I think what the landlords are quite fairly worried about is that there will be a race to the bottom where retailers pay the rent that they can get away with, rather than the rent they can genuinely afford to pay. So yeah, so they're on the retailer side, they really do need to be open about their footfall, their turnover data on those stores. And I think if they can do that, you know, actually the dialogue that's happening now in a way is a bit of a positive outcome of the pandemic, because it has really forced that, where I think otherwise it would have taken years and years to get to this stage.
Yeah, well, because I suppose one of the glitches is that, you know, if you've got an omni-channel model, you can argue, well, that purchase wasn't made in store, that was made online, and that's I think what you mean by trust and data. It sounds like Drapers is becoming kind of a UN model of bringing all these warring factions together, Kirsty. You're performing a wonderful public service.
Well, we've been running a campaign at Reset Fashion Retail. So we've the three areas of focus for us were business rates, rents, and local regeneration, because those were the things that we identified as being essentially what we need really to keep the high street kind of thriving going forward. So we've been looking at the big kind of taxation and rent issues, but also how you can regenerate high streets going forward, because to the points that have been made, we have far too much retail space. We already did, we certainly do now. And so we're seeing it empty out. And what we don't want, none of us want to have high streets that are just full of empty units. My local Debenhams is currently boarded up, and it's just so depressing walking past it. So we need a radical rethink, and it needs everybody to come together and do that. It can't just be retailers, it can't just be landlords, you know, it needs to be a combined effort. So that's why we've been trying to bring everyone together.
I'm mentioning Debs. James, I'll come on to you. Question from Gemma Anders. What's the outlook for department stores in 2021? I suspect it's not great, but maybe you can color that in for me.
No, it's not. I think department stores are going to continue to suffer. The larger ones that we've touched upon earlier, Marks and Spencers, do have the wherewithal and the capex to change and regenerate. But you know, you need some serious characters to make those sort of changes in a business. And it starts with the product. It starts where the consumer franchise is to begin with. So I think the bigger department stores have, like a lot of the businesses, and we've seen it for the last 10 years on the high streets of rural communities, disappearing, and the shops should have gone back to residential years ago. And I really do believe that is the future for all of the rural ones.
Yeah.
But staying with the department stores, I think you will see further decline. People are getting very disenfranchised with having to go in and see U2 lookalike brands in these department stores that don't stand on their own feet. They have gone the concession space for a reason. And I would just caution that that's where Marks and Spencers are putting a lot of their efforts now to bring in brands, to bring in new consumers. And I think, yes, it'll work for a time, but I don't think that's the answer. I think individual consumerism will probably alight more quickly at the independents coming to the high street with newness and change. I think further decline on department stores.
I think M&S could maybe get away with it if they don't try to be all things to all people, which, as we know,
Never
they
tried
kind of
that
have.
before, Kirsty.
Yeah, as we know, they may have struggled with before. But with the department stores, you know, I think that's been part of the problem, is trying to be all things to all people.
Yeah.
Huge spaces. You know, the beauty halls have worked for them in the past, but again, I think about my local Debenhams in the last few, it closed last year, but you know, before that, when I was going into it, it was pretty empty. There was no feeling that you were walking into a place that specialized in any particular product, where you were going to get any kind of particularly specialist help. But we've seen, there are examples of department stores that are thriving and do it really well, typically in the more luxury space. But you know, if we look at Selfridges, Fortnum & Mason, Liberty, you know, some department stores can thrive.
But I think, sorry to interrupt, Kirsty, I think there are a couple of, I mean, I was in Wimbledon and Ely's, you know, I think there are some really good local ones. But what struck me, I interviewed the boss of that group at an event last year. The amount they have to put in, because the consumer is so unforgiving. It's almost like painting the Forth Road Bridge. You have to keep updating the interior and making this great experience. I'm conscious of time, so I wanted to turn to Simon. And Simon, we're talking about this remaking of the high street, as James and Kirsty talk about, and we need more retail space and we need more commercial. Who leads on that? Does it need something from government? And how does that change of use come into these financial conversations that landlords are having at the moment?
Who leads on it? Wow. I'm not sure, actually. I think the amount of space that's available and the amount of vacant space is going to increase. I think a lot of businesses are going to restructure or are going to lose physical sites in favour of having more of a presence online. I think it has to be led by government. I think there has to be legislation and easing in planning in order to enable conversion. You know, the curiosity, I say curiosity, we saw before COVID that you had this increase of experienced businesses. You know, I have a retail park down the road where they've got a crazy golf course and they've got an escape room, all these changes, and it's become a curious retail park in the sense that there's not a huge amount of retail on it. There's a lot of different things, but I think it will be. I think landlords will have to lead it with government to say, look, come on, we have city centres, we have town centres, we need to make them vibrant, and we need to make sure that we've got the right strategy in order to do that.
Steve, to come to you and just to touch on a couple of questions. Oh, actually, I'm going to quote what Jane Christie's just said, because I disagree with Steve's earlier point. Didn't think that was allowed. On beauty and footwear regarding trading online. I work for a luxury footwear brand and we are seeing growth in our online channel, rent and business rates aside. How do the panels see the best way for brands to pivot their business models to meet consumers' changing demands?
Where do I start? Well, first of all, I'm delighted that the footwear brand that Jane is with is seeing the growth on the online channel. Whether that is making up for the decline, as I anticipate it has been a decline of in-store sales, I don't know. That's for Jane and the brand that she's with. So the question goes on rent and business rates aside, how do the panels see the best ways for brands to pivot their business models to meet consumers' changing demands? First of all, not one size will fit all. I'm very confident of that. I think brands need to think very closely, and I think James made an excellent point about what Doc Martens have done in terms of working out what their market is and then going for it. And each brand has got to do exactly the same. And that fits in very neatly with the point that I think Kirsty made. It's all very well for M&S to be bringing brands into store from Jaeger and then go forward with also various collaborations. I think with Ghost was one recently. That's all fine. But if that's not actually meeting what your market wants, what the people who will be visiting your stores or going online to m&s.com, if that isn't what the market wants, then it's not going to do any favors whatsoever. So what do brands need to do? Well, they need to work out what their market is and then work out how best to reach their market.
Yeah, okay, great. I'm going to carry on with some questions. Thank you for submitting them. There's some really good ones coming through. Maybe for Simon, if from an anonymous attendee, if turnover rents are going to be the way forward, isn't it going to be harder to value the property? And usually click and collect is operated by another entity to the shop you're collecting from. So arguably that shouldn't count towards gross turnover of the store. I think as we referred to in the point with Kirsty, this Simon seems to be the sticking point to getting everyone into turnover-based rents.
Yeah, Kirsty was absolutely right. I think fundamentally, the big problem with turnover rents and the big problem with some of the CVAs is trust. It's trusting that everybody's going into it with an intention to deliver on their side of that agreement. And you know, turnover rents are all very well in principle, but I'm sure there's a number of accountants on this call. There is a number of different ways to slice and dice the figures to come up with what your turnover is. And that's a real challenge. And coupled with the point that was made in that question about valuation of properties, landlords are not going to have an appetite to be giving away their space for less than they think they can get for it. And so I question whether we've yet got the right model of a combination between base rents and turnover rents, and landlords being comfortable that there is a contract they can enter into with a tenant that gives them sufficient protections, whilst giving a tenant the comfort to know they can deliver on what that rent will ultimately be.
I suppose the challenge is this, is the way as you portray it, it's very, very complicated. Lots of historic positions need unwinding, and the government hasn't really put the focus on this yet. And by the time we get to where we need to be, the online only players will be significantly bigger, again.
Yeah, absolutely. And I think, there's been a lot of restructure of leases already, more in the well-known brands. But for those restructures that occurred 2018, 19, 20, the question is whether they were good enough, whether they could achieve enough. And if the start of turnover rents turns out to be ultimately the failure of those businesses because they still can't perform under those conditions, then it will essentially cause landlords to pause and believe whether they are worth the paper they're written on. And so there's a long way to go in how the commercial property market comes out of COVID-19.
Kirsty, do you see some questions about the regional variation? What do you see across the country? I suppose there are bright spots and less bright spots.
Yeah, so I think COVID has redrawn the map somewhat, and we're still to see where it'll all settle. But yeah, there have been some changes in terms of currently with shopping behaviour. People are where we're seeing bricks and mortar do better is in very affluent market towns, the likes of St Albans, nearest to London, for example. So those sorts of areas are doing well because of obvious reasons. You've got fairly comfortably well-off people in the locale, and they're all having to shop locally, so great. City centres have been suffering, well reported. They've not got the office workers, they don't have the tourists. So there's that part of it. And then in terms of sort of regionally, I think particularly with the closures of Debenhams, some Arcadia Group fascias, and various other stores that we've seen disappear from the high street over the past 12 months, it is disproportionately affecting certain parts of the UK. So if you look at the kind of split, I think the northwest and southeast have been quite hard hit, but where the London area might have been hard hit by a lot of these stores closing, they probably will have quite a few others will come in and fill those units. And I think, James, you mentioned like right back at the beginning of this, the impact of closing a large anchor store on some of these regional, like mid-sized towns will it'll be really hard. They'll feel it, because that is the thing that usually would draw people down to that high street. So all of the surrounding businesses, there will be a knock-on effect there.
So who are the anchor tenants of the future? Who are the anchor tenants of the future? And will every market town get one? If you just because you had a department store doesn't mean you get that mix with it, whether it's the go-karts and the ping pong or escape.
Well, this is it. This is the big question. It's not as simple as, oh well, Debenhams is gone, so we'll have a John Lewis move in here. As we've talked about, nobody at the moment is looking at rapidly expanding their store estate. Primark are still opening stores, unbelievably, given that they haven't had an online channel to fall back on during COVID, but they still have plans to open stores, but it is modest. They don't want to over expand in the UK, so they're one of few retailers you can think of that would take a large unit like one that Debenhams would have occupied. If I look at the ones again close to me, they are quite interesting examples. The one closest to me, which is in Clapham Junction, they're converting it to mixed use. So they'll have retail and and sort of leisure hospitality on the ground and basement floors. The rest will be offices, and that's to the point of there just isn't the demand for the retail space anymore. So actually, that large anchor store it won't be there. There is a large TK Maxx next door, but I don't think it's quite the same pool as a department store. So it just won't have that large anchor in the same way anymore. The next nearest one in Wandsworth is being taken over by an entertainment company, so it's going to be go-karting, it's going to be ping pong, pool. Yeah, fun, but again, is that really the thing that's going to draw people in and create that feeling of it being a community hub. I mean, I don't know how they're going to do it. Perhaps it will, but I think you still need retail in there as the kind of beating heart of the high street. So yeah, I think the sad truth is we're going to see some of these big units sitting empty for a while the local communities work out what on earth they're going to do with those spaces, because the retailers don't have the demand. They're not going to commit to those large spaces.
I just imagine your weekends, Kirsty. It must be hard to switch off when you're wandering around thinking, oh, well, what's the rent on that one, or something.
Yeah.
James, I want to turn to you. This might be the last question. Really good question from Chris Scott Gray. How do we encourage a new breed of entrepreneurs to create the retailers of the future?
Very good question, and typically coming from Chris Scott Gray. I think it's about reinvention. I think if you stand back from everything the panel has replied to, you need to understand that we're witnessing not an evolution, but a revolution. And we know with each industrial revolution, the speed of change is exponential. So I really have a hard time seeing when the government's going to wake up to the demise that we are witnessing and the scale of it and the cost attributed to it. So I think entrepreneurs are being looked at. And I know that private equity and venture capital are looking at startups more now than ever. The return and the risk is far more beneficial than reinventing a Jaeger. So I think I think the focus will be based upon, as I touched upon earlier, a footprint that's no more than 15 to 25% on the high street, with the balance online. So I think one has to wake up to say that the square footage that currently is in decline will continue in decline by probably 20 to 25%, if not more, this year. And I think the ones that will survive on the high street, like a lot of the restaurants that are coming to the high street, will be giving newness and change and an experiential feeling in store that's not there in other parts of retail currently.
And they should, well, entrepreneurs, young entrepreneurs are meant to be drawn to these intractable problems. So it feels like we currently have one. We have an industry in flux where there is opportunity for the disruptors.
Correct. And I think it is a disruptor market. I think private equity is taking that view right now. And I think where we will see the change, you might see some of these big sheds going to 5-star luxury healthcare for retirees. I think that's being pursued as we speak. And I think you're going to see a lot more of the Boohoo and ASOS change of these idling older brands and reinvention for a period perhaps, because let's not forget that Woolworths wasn't a great success, neither was BHS when it went back online.
So just because you have some people coming in the door of the physical store doesn't necessarily mean it's going to work in the internet space.
Absolutely correct.
Really interesting. Steve, very briefly, do you agree with that prognosis, and what do you think the industry needs to see on the 3rd of March from Rishi Sunak?
I'm going to be controversial. I'm going to say, and I think this alludes to something that Simon mentioned, I think we actually need to allow what are rapidly becoming zombie retailers across the piece, not simply fashion. I think we're going to have to allow them to go bust, to allow for equity to flow where equity needs to flow, so that the entrepreneur retailers of the future can grow and develop. That will have huge implications, not simply for retailers, but for unemployment. It will have huge implications for a host of places from where government looks to get taxes from, but also provide support too. But we're in danger of paying a price for allowing businesses to carry on when they are well past their sell-by date.
Okay, Steve, thanks very much. That's sadly all we've got time for. I think that was a fascinating conversation. So I think we're going to see some opportunism on the high street. We're going to see some tough conversations about property. And it feels like what our panelists are saying is we could do with a bit of government leadership, not just on rates reform, but actually a blueprint for where we go next. I would say, please do take a look at our Building Financial Fortitude program. The details of the wider program are on the Quantumate website. It's quantumate.com/fortitude. Fortitude. This was the first of two retail webinars that we will host. The next one, which really looks at a lot more into the future, it looks at where leisure and hospitality will play a part. That will take place on the 1st of April at 9:30. And it leaves me just to thank so much for everyone who've contributed in the last hour, to James, Kirsty, Steve, and Simon. Thank you for your time, and thank you to everyone who's listened in for your contributions. Oh, there's the screen that plugs my podcast and book, which is always very good. I would encourage you to buy all the books put out by the other panelists, and of course subscribe to drapersonline.com. Thank you very much, and good morning.